This is part 10 of our video. Here we'll talk about business expenses that are not eligible for deduction. As you probably remember, most expenses could be deducted if they are business related. But there are some exceptions.
Pavel, can you tell me about them?
Sure. First of all, you cannot deduct personal or living expenses. For example, you buy furniture for your bedroom. That would be your personal expense and therefore not eligible for deduction. Another good example would be personal clothing. Some other expenses are specifically mentioned in the Income Tax Act and regulations. For example, you cannot deduct interest and penalties paid in relation to your income tax, life insurance premiums, donations to charities and political parties, in most cases golf and sport clubs memberships, prepaid expenses, payments for some legal and accounting services, most payments for advertising in a foreign media, and some other expenses. Also, you cannot deduct any operating expenses if you paid for them before starting your business.
Can I deduct my computer if I bought it before starting my company?
In part 3 of this video, we talked about operating versus capital expenditure. So, capital expenditures like computer, printer, or office furniture can be amortized even if you bought them before starting a business. But their cost would be not the purchase price, but a fair market value.
Is there anything else you would like to mention?
Yes, before we finish, I would like to remind you about that common sense principle. Every type of business has its average percentage for any category of deductions, and CRA has that statistics. So don't try to cheat or be extremely aggressive when it comes to claiming expenses. You would be much better off if you stay organized and keep good records of all your business expenses. Just look around. There are lots of them. I hope this information was useful. And of course, if you have any questions, you can give me a call at 416-857-7570.